Hi, and welcome to Section 5-3. Our topic today is dishonored checks and electronic banking. In the unfortunate event that a customer hands you a check, which you then take to the bank to either cash it or deposit it, and the check is not valid because there's not enough funds in the customer's account for you to either cash or deposit the check, that check has now been called a dishonored check, or you may also know as a bounced check. And a check that's dishonored means that there's not going to be a way to deposit or cash the check because the customer's account does not have enough funds to cover that. And unfortunately, your bank is going to charge you a fee for attempting to deposit a check or cash the check of which is not valid. And in this case, we need to update our records because we had assumed originally that when a customer is trying to pay us on account or pay off an old debt, we would have assumed originally that that was going to go through. So we'll now have to reverse our records to indicate that the check that we thought was going to increase our cash is now going to decrease our cash account. So in this example, we have on November 29th, received notice from the bank of a dishonored check from Campus Internet Cafe. The check was for $70. The bank charged us a $35 fee, which brings it to a total of $105. The check plus the $35 fee, $105 total. So we're going to go to the general journal. We are going to reverse what we thought was once at good time we thought it was going to go through, and now we have to reverse everything. So on the general journal, you're going to write the date, in this case the 29th. You're going to increase the customer's accounts receivable account for the full amount. That includes the check and the fee. So the full total amount would, in this case, would be $105. And unfortunately, we have to decrease our cash account by the same amount, $105, because we once thought that we had enough money that we thought was going to increase our cash account, and instead is decreasing. So until the customer gives us another check, which we hope will be good at the time, we are going to have to take a loss on this amount, including the fee, until that time. So accounts receivable will increase and cash will decrease. On the work together, which is on page 133 in your textbook, the directions in this example say that on March 15th, we received notice from the bank of a dishonored check from Christopher Icola on the amount of $63. However, there's an additional fee of $10, so now the total comes to $73, and that is according to Memo 121. So the first thing will include the date, which would be March the 15th. We're going to have to increase Christopher Icola's accounts receivable account because now he's back into debt with us until he gives us a good check. And to increase accounts receivable, we have to debit that account by the full amount of $73. That includes the fee and the check. And we're going to decrease our cash account because until he pays us, that money is coming out of our own cash, which includes the fee. So cash has been decreased, and all of this is according to Memo 121. Eventually, Chris Icola should give us a check in which we will once again decrease his accounts receivable and increase our cash. But until that happens, this is the way it's going to sit. Now, occasionally, you might make a payment as a business. You might make a payment to a vendor. You might make that payment online or using a debit card, just like you might pay your cell phone bill online. And when we're not physically receiving cash, that would be considered an EFT, which is an electronic funds transfer, a digital way of making a payment. And in this example, we see that on September the 2nd, we paid cash on account to Kelson Enterprises for $350, using an EFT. So somehow we electronically transfer that cash on account to Kelson Enterprises according to memo number 10. All of these examples today, by the way, are using memos to indicate when they occur. So on the general journal, we can see that our accounts payable, like normal, whenever we pay cash on account, our accounts payable would decrease, and our cash account would also decrease because we're paying cash on account. The only difference to this is that instead of using a check for the source document, we're using a memo, and that is according to memo number 10. So in our example on the work together for 5-3 that we're going to do together, March 16th, according to the textbook, we paid cash on account to Spinoza Enterprises for $135 using EFT. This is in accordance to Memo 122. So the first thing we're going to do is, since we paid cash on account, is decrease our accounts payable to the Spinoza Enterprise Company, and we decrease accounts payable as a debit, so that's $135, and we're going to decrease our cash account since we're paying cash on account. That's a decrease to cash. Also, that's a credit of $135, and this is in accordance to Memo 122. So that is how you would handle a transaction when you are paying with an EFT, an electronic funds transfer. Okay, and another example today, our last example, is when you use a debit card to buy something, to purchase something. Maybe you ran out of supplies, so you had to run to the store, and you decided to use the company's debit card to make that purchase. And debit cards pull money straight out of a checking account, which would be cash. So in our example here, on September the 5th, we purchased supplies for $24 using a debit card in accordance to memo number 12. So purchase supplies. Okay, we've done that before, just like you would with cash. So our supplies would increase as a debit, and since this debit card is pulling cash out of our cash account, we are going to decrease our cash as a credit. So in our work together on page 133, March 17th says we purchased supplies for $31 using a debit card according to memo 123. So the date is the 17th, and since we are purchasing supplies, we're going to increase our supplies as a debit of $31. And since we're using a debit card which pulls cash out of our checking account, we're going to decrease our cash because that's how we're paying for the supplies, as a credit. And this is going to be in accordance to memo 123. I will see you tomorrow when we start working on section 5-4, which is petty cash. Have a great evening.